Yeah. This ain't about gossip. This ain't about noise. This is about ownership, clarity, strategy, power. Mind your business. Level up, no limits. Stop grinding in it. Start building a vision. CEO mindset. Boss moves relentless. Cut the confusion. It's time to get intentional. You've been working overtime, still feel behind. Chasing every trend like it's the finish line. Busy all day, but the profit don't climb. That ain't a hustle issue, it's a strategy sign. Everybody talking, everybody selling. Blueprints, copy paste, but nobody telling. You the power source, you the engine. Clarity first, then scale with intention. No more guesswork, no more doubt, no more building from burnout. You don't need louder, you need a line. Stop working in it, start owning what's mine.
Hello, everybody, and welcome to today's episode of Girl Mind Your Business. We're going to talk about building your business right, or you pay the price. We're talking about your foundation problem. That's right. You can have the best product in the world. I mean, the best. You can have loyal customers. You can work hard. You can work harder than anybody in your industry. But if that foundation is wrong, the legal structure, the tax setup, the employer compliance, all of that, you leave tens of thousands of dollars on the table every year. Every year. And the worst part, you don't even know it because you don't know what you should have kept. Welcome to today's episode of Girl Mind Your Business. I'm your host, Cookie Kate, and this episode might make you call Transactions Innovations Management before it's over. Trust me. We're going to talk about how your business is built and whether the building is helping you or hurting you. Now, this episode is brought to you by Transactions Innovations Management, where we don't just prepare your taxes, we prepare your wealth. For the business formation, Transactions Innovations Management help entrepreneurs and individuals stop overpaying. You got to stop overpaying taxes. Visit us today so we can talk about it free, so you can get a free 15-minute tax strategist session at 205-291-6703 because your money deserves a strategy, not just a receipt. Now, we back to our topic. Let me break this down for you and just tell you the truth. When you run a business, there are different legal structures that you can take. You can spend thousands of dollars with an attorney if you choose. But most people don't have that kind of money, and they don't choose to hire somebody to do something that can be done for them in a least expensive way. That's how I'm going to put it. You have a lot of different implications that how you're taxed, how you protect it, and how you're seen by IRS. Now, most people use the sole proprietorship. This is really a default way, and it's the most expensive. Most people didn't know that, but it's the most expensive. If you run a business, you have to be formally, and you hadn't been formally set up. Let me tell y'all about one client. This guy had been in business for 30 years. 30 years. He did not even have an EIN. I was like, oh my God. He didn't have an EIN. He was doing really well. He said he didn't need all of that stuff. But one of his friends knew one of my friends, and they just told him to give me a call. We got him set up. We got him, oh God, he got a CRM. He think he's doing it now because even though he was doing things the old fashioned way, we got him up to speed. We got him a bot and we got everything automated for him. And he said he's really able to rest now because he had no clue. And even though he had people around him that could have helped him, they didn't. So we got him up and got him running, and now he's legal and he's enjoying business much better now. But you and your business with the sole proprietor are really the same entity. Every dollar, every profit of your self-employment is taxed at 15.3%. Now, on the top of your regular income taxes, you have zero asset protection. This means if somebody sue your business, they suing you. Your car, your house, your savings, everything that's on the table. That's what they're doing. Now, the hard truth is sole proprietorship is the most common way, it's the most common structure for new businesses. And the most expensive for profitable businesses. If you're making real money as a sole proprietor every month and you're going without even reviewing how IRS see you, oh, you may have issues. Now, the LLC, this is the protection layer. A company that's a LLC, it gives you your personal liability protection and your business assets. Those are separate. So if your business gets sued, your personal and general assets are protected. But what most people don't know, by default, a single member LLC is taxed exactly like a sole proprietor. You still paying 15.3% self-employment tax on all your profits. Now, the LLC protects you legally, but it doesn't automatically save you taxes. And most people didn't know that. Unless you make specific elections on your tax and say that you're an S corporation, you're not saving. Now, the S corporation, this is the conversation that we need to have. And in my experience, it saves your business, the business owner, money every year. It's one of the most underused strategies in the tax code. And a lot of people don't know about it. A LLC can elect to be taxed like a S corporation. You got specific filing statuses that you can choose. And when you do it this way, your profits are taxed the way they should be. Now, the way this works, the S corporation, the owner works for the business. You pay yourself a reasonable salary. Now, that salary is subject to payroll taxes, which is fine. You own the business. So you basically paying yourself, but you're getting it back. The remaining of the profits, anything above your salary, are distributed to you as the owner. Now, did you get that? The profits are distributed to you as the owner, which are not subject to self-employment taxes. That's the good thing about the split. Let me do a little math for you. Okay, your business earned $200,000. As a sole proprietor, you pay 15.3% on all of that $200,000. That's $30,600 in self-employment tax. But if you're an S corporation, you pay yourself a salary of $80,000. You pay self-employment tax on that $80,000, which is $12,000. The rest of that $125,000 is distributed to you, but you don't pay self-employment tax on it. That's $12,240 instead of $30,600. Now that's $18,360 that you save every year. And that's permanent. That's not just this year or just next year. That's a permanent savings. Now, before you go and file your taxes tomorrow, let me give you some real information. The S Corp election has requirements. You got to pay yourself a reasonable salary, not $1. There's a way around it, but this is the legal way. The IRS challenge people that, where the business owner, you own the business and then you underpay yourself. They already know what you're doing. They know what time it is. Your salary should reflect your gross, because you can't just pay somebody else to just do a job, pay yourself $5 every week or whatever. You got to pay yourself. But this is why you need to call Transactions Innovations Management and get us involved in that decision so we can help you choose the tax status that you need to be in. We calculate your salary, handle the election filings, the quarterly. We set up your payroll structure. But now if it's done wrong, it can create some problems. But done right, it's the most powerful legal tax reduction strategy available to self-employed individuals. Let me take a pause right here and talk about something that can get you almost zero coverage in tax and financial content. Business services online. Many of you may not even know about it, may not have heard about it, but this is through Social Security. It's an online system for businesses. We help you do that too. Transactions Innovations Management try to stay up on all the new perks, all the systems that are available to business owners, so you can worry more about your business making the money than worry about what's coming out. And the BSO matters more than you think it does because Social Security no longer is allowing you to just send it in. Everything has to be done online now. And a lot of people don't even know about it. I'm trying to tell you what you need to know. Now, BSO exists if you have employees. It's the Social Security and Medicare contributions that need to be reported, not reconciled. You got to report them and reconcile. So, BSO has a portal. All of this happens to if you have W-2 employees, you got to verify with Social Security. There's a lot of things you have to do. With Transactions Innovation Management is that's one of the services that are offered through Transactions Innovations Management. It doesn't matter how many employees you have. It does not matter what you're doing. If you're paying into Social Security and Medicare, you got to have this service. It's just that simple. It helps you with your payroll tax reporting and it makes sure it's accurate because I actually had someone that had a W-2 and they were like, no, I paid more into Social Security. That's wrong. When they called back, this was one of those older handwritten paper jot down payroll systems. And she just said, "Yeah, I may have calculated it wrong. So that's what I sent you. And basically, you got to go with it." Oh, well, there's nothing you can do unless it's reported right. But if you have employees and you're not correctly registered, you might have issues, just like this one person had. And they couldn't dispute it because she didn't know. You want to make sure that everything you do is legit and up to the standards that they should be. Because in this economic environment, we want to make sure every angle of self-employment is taken care of. Even if you don't have employees and you're self-employed, you need to be reporting your Social Security and Medicare benefits and it may or may not be there, but now you have to do it, whether you want to or not. And a lot of people don't pay into Social Security. And let me tell you this, I found this out. If you don't pay into Social Security, and if you have not paid in 10 consecutive years, it's reduced. And the amount that your benefits are reduced to, you can tell them all day, I made money, I did this. If it was not reported, that goes against you. And a lot of people don't know that. And I just found that out, probably about 4 years ago. Because I had somebody that was making really good. And when they retired, Social Security said that they had not paid into Social Security. So their little benefits were reduced tremendously. They didn't have a 401k because they were so sure that they had been paying into Social Security. And it hurt them. They had to rethink some things and redo some things, but you got to think about the future. And that's what transactions innovation management does. It helps you talk about what you want and what you need in the future. What legacy do you want to leave your family? The tax is reported and applied the way it should be. If your earnings are not being recorded according to them, you get filing errors, unreported income, mistakes, just like the person I just told you about on the W-2. It can affect your Social Security benefits. If you entitled, you need this. So when you reach retirement age, you'll have something to fall back on. A lot of people don't believe in Social Security now for whatever reason, but I'm just saying, it's not a someday problem. This is a right now building your future problem. Time management, transaction innovations management help business owners set up and maintain your BSO account. We verify that your payroll reporting is accurate, and it's a process. And the first person that we did, it was really a process because the employee, and it's not like transaction innovations management can just go in and add information. Everything done is verified with that employer because of the transaction innovations management will be a third party filing for you. So everything has to be verified through Social Security. But you can mind your business the way you want. I'm just trying to help you help yourself. And if you never heard of BSO before, this is a sign that you need to reach out to Transaction Innovations Management. Now, the last part of this segment, this is critical. We're going to talk about quarterly estimated taxes. If you are self-employed or you own a business, the IRS expect you to pay taxes throughout the year, not just in April. You'll be surprised how many business owners do not pay quarterly taxes. You can pay it once a year at the end of the year in December, but it's so much. If you're making any money, it's so much. Now, the deadline for quarterly taxes are April 15, June 15, September 15, and January 15, the next year. If you miss these payments or you underpay, the IRS charges a penalty. Now, raise your hand if you got extra money to give IRS. What you don't want to do is not pay. Now, that's a real no-no. But if you don't pay enough, that's better than not paying at all. Now, right now it's at 8% per year for the underpaid amount. And that's not fine. That's what the penalty is. Then on top of the penalty, they charge you interest on the money that you should have sent in. They ain't playing with you. They want that money, whether you overpay or underpay. They expect it to be paid. Transactions Innovations Management help you calculate that. Now, the way you calculate, you estimate your net income and this is for self-employed or businesses. You calculate the taxes on that income, and then you include both the income and the self-employment tax. Divide that by 4, pay that amount each quarter. Now, it can be adjusted every quarter. If your income changed significantly and you in quarter 2 and your quarter 3 payment should reflect whatever that income increase is. I have a client, and Lord, we go through this every year. She don't understand why they always say she need to pay more. But in her mind, once her taxes are done and an amount is calculated, she think that's all I should pay. But that's why it's called estimated taxes. Because they don't know whether you're going to make $10,000 more, $5,000 more, $2 more. They don't know. That's why it's called estimated. But at the end of the year, they going to send you a bill. They don't mind sending that bill telling you you owe XYZ. Now, the problem with most business owners, they don't set money aside for quarterly taxes. They spend everything they get, and then they scramble up around when it's time to make that tax payment. The fix is simple. It just requires discipline. When money come in, just set aside 20 or 30% in a separate account for your tax reserve. Don't touch it. Now, I remember when my mom was in business, she had a separate account. And the bank used to give you this little booklet and it was for estimated taxes. It goes in the account and you write out how much is owed, and it's automatically taken when you send that voucher in. It's automatically taken from the bank, and the bank pays IRS. They don't do that anymore. They ain't got time to babysit you. Just open up a dedicated savings account, and every time you make some money, throw a little change in there, 20 or 30%, to take care of your estimated taxes. Quarterly payments, they come fast, just like that power bill. Time you pay it, it's time to pay again. But the money is already there, and you're not stressing or scrambling, and you don't have any penalties, because that can be expensive. Now, our time is almost up. So I'm just going to leave you with this. Get that account open for those quarterly taxes. Make sure you have your BSO set up correctly. This episode has been brought to you by Transactions Innovations Management, where we can handle all of this for you. Don't avoid it. Girl, mind your business. For real. Go be great.